Hello traders and welcome to another video review. Today is Thursday, August 17th, 2023. Let's find out what's going on the Forex economic calendar today. PPI input data from the Newsnet had been published overnight and they were deeply surprised the market participants. Actual reading was 0.2% on minus. Forecast was 0.2% and the previous reading was 0. So producer price index is deteriorating even further. Export trade balance and adjusted trade balance data from the Japan had been published as well. Big disappointment here almost everywhere. Employment change, full employment change, unemployment rate data from the Australia had been published overnight as well. The unemployment rate hikes from 3.5% to 3.7%, beats the expectations of 3.6%. The tertiary industry activity index from Japan deteriorating further to minus 0.4%. And during the London session, we got German Bundesbank speech at the 8 o'clock. Trade balance data from the Eurozone scheduled for release at 11 o'clock. Another speech from the German Bundesbank at noon. And then we got the London session. Philadelphia Fed Manufacturing Index is one of the key events today, one of the most important ones. So please pay attention to this data release. Then we have, of course, initial jobless claims, the second very important data for today. Urgent securities purchases from Canada are scheduled for release at 2:30 as well. And at the end of the day, we got the Fed's balance sheet, which is scheduled for release at 10:30 in the evening. So this is the situation of the current situation of the Forex calendar. We will take a look at the euro dollar first because of the FOMC minutes reaction, and then I guess we should go to the US dollar, to the Japanese yen, Australian dollar, and the New Zealand dollar analysis. So let's start with the euro dollar. Euro dollar 4-hour chart finally breaks somewhere. It happens that it broke to the downside. So right now what we are doing is that we are approaching the key level here. This is the, of course, a technical support level. So we broke below the recent lows and we are approaching the level of 1.0836. The recent low was made at the level of let me just take a different line. There you go. The recent low was made at the level of 1.0876. This low was violated. Now it will act as the technical resistance for the price. So what do we have here is a very peculiar situation because the momentum is negative. It's around the level of 32, 33, so there is not that far away from the level of the 30, which is the extremely oversold conditions level. And of course the market is moving down as well towards the technical support. So we are aligned with the price aligns with the momentum. A couple of other levels that can be important. The next technical resistance, local technical resistance, is 1.0901 and the other one is 1.0935. So those levels might be soon act as the technical resistance for eventual bounce of the euro dollar. So this is the situation on the main the most traded currency in the whole Forex market. So let me just take a screenshot. All right, and we should go now to first maybe Australian dollar because it's familiar with us. As you can see, the 4-hour chart of the Australian dollar is showing clear downtrend. The market keeps doing higher lows and lower lows. Higher highs and lower highs and lower lows. Of course, this is the lower high, lower high, lower high, lower high, lower high, and lower lows as it trends lower to the downside. So right now what do we have here is, of course, the technical resistance 6,500 pips, but I'm just guessing that we've done like a local technical like a local low first, 6,368, and possible technical support. However, the market conditions are now extremely oversold on the 4-hour chart. So where is the low? Where is some other level? As you can see, there isn't any on a 4-hour chart. Back to the April 2023. Let's switch to the daily time frame chart. What do we have here? Well, this is sustained breakout to the downside. So if we even let's analyze that on a daily time frame chart, because on the 4-hour we can't even find any technical support. So we got these two levels here, 6,461 and 6,500. That they will act as the technical resistance for the price. Very steep, very dynamic, aggressive breakout to the downside, and the downtrend is now developing on the daily time frame chart. However, we hit the extremely oversold market conditions on the daily as well. The next technical support, which is a weak technical support, is eventually yes, 6,389. This one has been violated already. All right, and there is one more. Let me just move this one because it will just skip the one. There you go. Yes, I want to move this one. Yes, perfect. And the next technical support is eventually here, 6,275. So we might be able to hit it as well. It's not that far away. The key technical support is the low of the 2022 from the October 2022, located at 6,173. So we will make it fixed so everyone knows what we are talking about. And that's the current situation. Another moving averages crosses around here, 50 crossing 100, which is not good for the bulls at all. We might see some kind of a bounce, as I said, here on the daily time frame chart, because we hit the extremely oversold market conditions. However, this zone here, let me just make it a zone. This zone here should basically cap any kind of a rally to the upside. Okay, where is my day? There you go, shapes. we had a kind of a upgrade to the to the web trader, if you didn't notice, because something changed since yesterday. So check this out, guys. Might be worth checking it. Okay. This is our zone, and the market should not go below, above the zone as the downtrend continues. So that's the outlook for the Australian dollar. Let me just switch to the New Zealand dollar. The New Zealand dollar on the daily time frame chart is in the same situation. Very strong downtrend breakout cross of 50 periods moving average and 100 periods moving average. The momentum hits extremely oversold conditions. Last time we hit the extremely oversold conditions, we trade like 1, 2, 3, 4, 5, 6, 7, at least 5 to 7 days. Then we've made a bounce, then another lower low on a bullish divergence, and then the rally started. So if we learn from the history, this situation is of course right now extremely oversold, but it might take a while right now for this market to stop doing what it does right now. So technical resistance, which is of course moving lower. Technical resistance right now is after the breakout below 5,980. Okay, so that's one of the lines, and the second line might be located somewhere here because it was recognized, and maybe somewhere here. So again, we got this level here, 6,027, 5,980. This is the zone for the best. So let me just there you go. We got the arrows, we got the rectangle. Very nice. We got the rectangle. So we will make the rectangle as well. So Why not? This is our, there you go, this is the supply zone. This is the supply zone, and only a breakout, sustained breakout above the supply zone might change the outlook to somewhat bullish. Next supports, those supports are very weak. 5,839. Okay. Then eventually, oh really eventually, 5,635, and let me just move this one here, maybe 5,594. They are not that far away from each other, as you can see, and 505,007 pips. This last one is the most important one because it's from the, again, October 13th, 2022, and this is the ultimate target for the best. If we talk about the retracements of the big wave to the upside, as you can see, we have it upside down. So I wonder if there is an option to, no, there is no option. So this one goes here. Yes, this one, yes, and right now it's like this. So okay, this one goes here. Let's say this is our Fibonacci. So now we are just testing the Fibonacci. Okay, so let me just put the last horizontal line around here and make it black so everyone knows we don't need this one anymore, because that's 68%. 68% of the retracement of the whole big up wave 2022-2023, 5,907 pips. This is where we are at right now on the extremely overset conditions. But will it hold? Will anyone care that there is 61% of the Fibonacci retracement? We will see very soon. So that's the New Zealand dollar. US dollar to Japanese yen. Daily time frame chart, as you can see right now, very short analysis. Daily time frame chart is showing us, where are the arrows? There you go. It's showing us the divergence on a daily time frame chart. We got the divergence. Let me just can I copy the arrow? Yes, I can copy the arrow, and it doesn't, not necessary, because I want to show you this. I want to show you this. You see, this is the momentum high, and now there is another higher high, and then there is momentum just below the level, just touching the level of 70, right? And now there is no doubt that this is the higher high. Okay, so what's the situation? Bearish divergence, negative divergence on the USD to the Japanese yen. We should see some sort of the retracement lower, maybe some pullback, maybe some kind of a let's say correction, but we need to take into the consideration the recent corrections. This is one of the biggest one, 12 days, 16 days and minus 6%, and the other one was 14 days and minus 5.4%. So kind of a equal, more take or leave 0.5%. So we cannot go more than basically 6% here to the downside. We can test 100 periods moving average, we can test 200 periods moving average, but then we should resume the uptrend on the US dollar to the Japanese yen very soon, in order to keep this market uptrend. Okay, to continue the uptrend after the correction. The correction is coming your way, so please stay focused and stay vigilant on the daily time frame chart, and of course the lower time frame chart as well. So what did we have? We have Euro, Australian, New Zealand dollar, and we have US dollar to the Japanese yen. I might think that this is enough for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.